Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Wednesday, February 9th, 2011. USDA came out this morning with supply and demand and production numbers for us, and got the grain markets all in a tizzy here right out of the gates. They reduced corn carryout. U.S. end stocks down to 675. That's down from 745 last month. That's over a 9% decrease, and actually the tightest stocks we've seen in 15 years now here in the corn. So that number really sparked some buying here today in the corn market, and we saw beans and wheat follow suit as the bean and wheat numbers came out neutral. They left domestic end stocks alone at 140 in the beans and 818 in the wheat, unchanged from the previous month. But we went higher nonetheless in both of those commodities. So where did we end up here today? March corn went up, made new contract highs, $7.03. We settled at $6.98. That's up 24 1/4 on the day. Soybeans were up 16 3/4 in the March at $14.51. 14.55 3/4 was the high that we saw here today. And Chicago wheat up 11 3/4 at $8.86. The high was $8.93 1/4. So off the highs a little bit there in the wheat market, but strong closes nonetheless out of all three grains. Right now, crude oil down 19, the dollar down about 37.5. So no real direction from outside markets unless you want to look at that dollar pulling itself on back a little bit here today to strengthen up the grains. But they didn't need any help anyway. The report gave them enough oomph, if you will, to run them on higher and significantly higher. Now is a great time to be considering getting any type of sales made on corn. Specifically soybeans as well. Get some of it sold at the elevator or the co-op, wherever you go to sell your grain. Don't put all the chips on the table, but there's some really good profits in there right now, and we don't want our clients and those who follow our research to miss out on these profits. If something were to happen, say next month with Planet Acres report, you got some time now to make a decision and get some profits locked in on the grain. So please do that. If you want to re-own it, you think it's going to continue running higher and you don't want to sell too early, give us a call. We'll come at you with some re-ownership strategies, but lock in those profits while they're there. Over to the livestock, feeder cattle broke pretty good here today. March feeders were down $1.32.5, 122.92.5 is where they settled up at. Fat cattle right now in the Feb contract, the pits closed up 7.5 cents today, 107.72.5. Did hear some cash cattle get sold at 104 in the Southern Plains yesterday. Didn't hear too much on the cash end of things here today. We know cutouts have been pulling back a little bit here. It looks like the highs are in for the near term in these cattle markets. If you don't have protection on the cattle, please go out and get some. Buy a put or do something simple, non-marginable to get the downside protected on these cattle in case they do break. If you follow cattle markets and you watch the April contract, it looks like it's trying to put it head and shoulders top in on that market, and that head and shoulders top could project on down to 105 again in that April contract. So be very cautious. There's some good profits in the cattle right now. Protect them. Okay. Hogs today unchanged at 91.25 in the April contract. Most of my attention today has been on the cattle. If you need ideas or if you're looking for guidance, feel free to give us a call here at Allendale. The phone number is 800-262-7538, or visit us on the website www.allendale-inc.com. My name again is Bob Dalton. Thank you for tuning in today, and we'll talk to you again here real soon.